For most people, money feels stable. You earn it, you save it, you spend it, and as long as shops stay open and salaries arrive on time, the system feels permanent. But history shows us something very different. Every major money system eventually changes, not because people want it to, but because the system itself reaches its limits. Right now, we are seeing signs of strain everywhere: rising debt, persistent inflation, political tension tied directly to finance, and a growing number of countries quietly preparing alternatives. One word keeps appearing in these conversations: BRICS. Some call it the future, some call it a threat, others dismiss it entirely. Today, we slow everything down. We explain what BRICS really is, why it exists, what it is actually doing, and what it realistically means for your money and your future. This is not about fear, it is about understanding change before it forces itself upon you. BRICS began as a simple observation, not a movement. In the early 2000s, economists noticed that several large countries were growing rapidly, but had very little influence over the global financial system. Those countries were Brazil, Russia, India, China, South Africa. Very different politically, very different culturally, but they shared three key characteristics: large populations, access to critical resources, and growing frustration with a system they did not control. BRICS is not a military alliance, it is not a single economy, it is not a shared currency zone. At its core, BRICS is a coordination effort, an attempt to reduce dependence on financial structures built by and for the Western world. Together, BRICS nations represent over 40% of the world's population, a significant share of global production, control over energy, food, and industrial supply chains. This matters because financial power does not come from ideology, it comes from scale. To understand BRICS, you must understand the system it is reacting to. After World War II, the world needed stability. Currencies had collapsed, trade was broken, trust was scarce. The solution was the Bretton Woods system. The US dollar became the anchor. Gold backed confidence, and global trade flowed through American institutions. Even after the gold backing ended in 1971, the dollar remained dominant. Why? Because oil was priced in dollars, debt was issued in dollars, global reserves were held in dollars. This gave the United States enormous financial influence. But influence slowly turns into dependence. If your trade requires dollars, if your reserves are held in dollars, if your debts are priced in dollars, then US monetary policy becomes your problem, even if you had no say in it. For decades, this system worked well enough, but cracks began to form. Debt levels rose dramatically. Money creation accelerated after 2008. Interest rates stayed low for too long. This created stability on the surface, but fragility underneath. Then something changed. Financial tools began to be used as political weapons. Sanctions blocked access to payment systems. Assets were frozen. Trade routes were restricted. When Russian reserves were frozen in 2022, it was a turning point. Not because of Russia, but because every central bank saw the risk. If reserves can be frozen once, they can be frozen again. This is when diversification becomes survival, not ideology. BRICS is the result of that realization. Despite headlines, BRICS is not acting dramatically. There is no overnight replacement of the dollar. There is no sudden collapse. Instead, we see quiet adjustments, more trade settled in local currencies, alternative payment systems developed, gold reserves steadily increased, infrastructure built outside Western finance. These are not revolutionary actions, they are defensive ones. This is how financial systems transition. Slowly enough to avoid panic, carefully enough to avoid collapse. One pattern appears in every financial transition. When trust weakens, systems move closer to tangible value. This is why BRICS nations have been accumulating gold. Gold is not political. It carries no default risk. It requires no permission. BRICS nations also control critical commodities: energy, food, industrial materials. Future trade does not need ideology. It needs supply. This shifts power quietly, not loudly. For ordinary people, the effects are indirect but real. As systems fragment, currencies fluctuate more, trade becomes less uniform, inflation becomes harder to control. Not collapse, but instability.